Good morning, everyone. Ian Andrews here from LakewoodAlive. Thank you for joining us for today's webinar about the Paycheck Protection Program. We're going to wait for folks to join us, so I'll be back with you in just a few moments. Thank you. Good morning, everyone. Thank you for joining us today. Ian Andrews here with LakewoodAlive. We appreciate you spending some time to learn about the Paycheck Protection Program. We're going to give it just another probably 2-3 minutes to let folks enter the room, and then we'll get started momentarily. Thank you. Good morning, friends. We have a couple folks who have joined us since I last checked in. So we're just going to go, I think, probably 1, maybe 2 minutes, and then we'll get started. Thanks for joining us today. Okay, good morning, everyone. My name is Ian Andrews, and I'm the Executive Director with LakewoodAlive. Thanks for joining us today for the expanded Paycheck Protection Program, How to Make It Work for You. This webinar is being presented in partnership between LakewoodAlive and the Lakewood Chamber of Commerce. Thanks to our friends over at the Chamber. Patty, I see you're on the call, so thanks for being here, Patty. We're going to have a really nice conversation today. Looking forward to understanding PPP 2.0, for lack of a better term. So let's just dive right in. Everyone, thanks for joining us today. We appreciate it. So just a quick agenda. We're going to run through panel introductions. We'll get right to the presentations, and then we'll have questions and answers. If you would, please take the opportunity to type in the questions that you have into the thought bubble. My colleague, Allison Urbanik, is joining us, and we will pose the questions to our panelists at the end of the presentations, just in case something you ask, it may be covered a little bit later. So please, as questions arise, type them in, and then we'll make sure to address them at the end of the presentation. Okay, if I could ask the panelists to unmute themselves. I'd like to introduce first, from First Federal Lakewood, Kurt Kappa, who is the Senior Vice President, Chief Lending Officer. Kurt, if you wouldn't mind saying a few words, please.
Yeah, thanks, Ian, and welcome everybody. I first want to thank LakewoodAlive and the Lakewood Chamber for allowing us to present today. I mean, this is a very hot topic, and it's very important to everybody out there in the business community, and we're excited to be here and to help facilitate this. Just for reference, like Ian said, my name is Kurt Kappa, and I'm the Chief Lending Officer at First Fed of Lakewood, and I'm leading all the efforts here on behalf of our bank on the PPP side of things. So I'm hopeful to provide you guys with some additional insight and some tips and tricks when applying for the PPP loan.
That's great, Kurt. Thank you very much. Let's now turn to Will Costello from Laskey. Costello. Will is a CPA. He and his family have their firm on Detroit Avenue. Will, if you wouldn't mind saying a few words.
Sure, yep. Thanks, Ian. Thanks, LakewoodAlive. Thanks to the Lakewood Chamber. This is my second time. If there's some recurring or returning attendees, I presented during PPP1, and I'm glad to help here again with PPP2. I've had a lot of questions from clients, and hopefully we can give some good information. I think today people will get the most out of asking questions at the end. I know there's a lot of information here, but definitely ask any question you have, because this is a good opportunity. So thanks again.
Thanks, Will. Appreciate that. And Jessica Parkison, who is a co-owner at Salt, one of Lakewood's top restaurants. We thought it'd be great to get perspective from a business owner who has gone through these programs. So Jessica, if you wouldn't mind saying a few words, please.
Yeah, thank you, Ian, and thank you, LakewoodAlive and the Lakewood Chamber of Commerce as well for inviting me to talk about this. We just received our second round of PPP, so I'm excited to share that experience with everybody and answer questions to any other business owners they should have them.
Great. Thank you, Jessica. Again, folks, if you have questions, please type them in the thought bubble. Allison Urbanik, who is our Housing and Internal Operations Director, will then keep them kind of organized, and at the end she'll be able to ask the panelists those questions. So please make sure to type them in, and we will ask the panelists these questions once we're done with the presentations. So let's dive right in. Excuse toggling in between. Okay, Kurt, you are good to go. Take it away, and let me know when you want me to advance the slides. Go right ahead.
Great. Yeah, go to the next slide here. We'll start off here. I'm going to keep this. I've got a lot of slides here that are pretty detailed, but I want to go into high level of what the slides say and walk through some common questions that I've seen. But just to start off here, the PPP 2.0, the funding for the businesses, that's exactly what this is. This funding for the PPP is for businesses out in our communities that need this funding for payroll, and it is a payroll protection program. So these are focused, this second round funding, there's a couple differences from the first round to the second round. The second round, they just brought out about $284 billion opposed to $374 billion in the first round. Of that, they're really targeting the small to mid-sized businesses. Is what you can take a look at is for the differences between the second and the first, they decreased the maximum loan amount to a company. So beforehand it used to be $5 million, and now it is $2 million in the second round. So government really wants to take care of the small to mid-sized businesses, and that's what this program is really out there to do. And I really like to stress the importance to, this isn't a free-for-all and grab the money just because you qualify for it. I really like to stress the importance of these funds are available for businesses out there that need the funds. There's businesses that this is a lifeline for them to get through it, and that's what the banks are here for, is to help them get through these times and partner with the SBA and the government. So as you're looking at, do you qualify, do you want these funds, should you take these funds, please keep that in mind, because these funds are limited, and once the $284 billion go, it's gone. So it's first come, first serve, but it's just something important to think about there. So Ian, next slide. If this is the first time that you're applying for the funds, main difference between PPP and the PP 2.0 is if this is the first time doing it, you could qualify up to $2 million, but you have to have more than or less than 500 employees. So that's a key difference from the second round, which is, Ian, if you go to the next slide, is 300. So one thing that they did differently was they wanted to make sure that they were helping out the small and mid-sized businesses. So they dropped the number of employee count down to 300 was the maximum that they could have. So one common question that we see is in the first round is, if I didn't take the first round, can I get the second round? The answer is yes. If you took the first round PPP loans, can you apply for the second round? The answer is yes. However, there's some eligibility requirements that you have to hit. And these are the three main targets that you have to hit if you took the first round. Very important to note that you have to demonstrate that you had at least 25% reduction in your gross receipts between quarters from 2019 to 2020. You have less than 300 employees, and that you exhausted all of your funds that you received from the first round of the PPP loan. So these are the three key trigger points that the SBA is looking for that you must submit to the bank when you reapply for your second round. So if you hit all these, you do qualify for it. So next slide, Ian. It's important to note they kept the second draw the same for most businesses at the 2.5 times their annual payroll. So if you reapply, you probably would qualify for your first round of PPP loans. One thing that they did do that was a little different was really to help the food service industry out. So specifically in Lakewood, we have a lot of food industry that we need to take care of and support. This is very important to note that they did increase the PPP loan amount to 3.5 times their monthly 2019-2020 payroll costs. So that is very important to recognize and to know if you're in that industry. However, when you do apply for it, you have to make sure, this is a little tips and tricks, you see the NAICS code 72. Only companies that have a NAICS code that start with a 72 will qualify for the 3.5 times, and that'll automatically populate when you're going in to make an application for the PPP 2.0. So if you are in that industry and you do make an application, make sure that you do ensure that it did calculate it correctly at the 3.5 times versus 2.5 times. A lot of times you look on your tax returns and the NAICS codes are incorrect, and you type in what's on the tax returns and it won't populate to the 3.5 times. So just make sure that you review that when you're making your application. And the other important thing is the max loan amount is still $2 million for this round. Next slide. So what are the qualified uses? This is high level here. Will's going to go into more detail and how it works, but the qualified uses this is a straight payroll benefit. You can include all your benefits when you're using your funds. You can pay your mortgage, interest, rent, utilities. One thing that they added in this time around was it protects costs related to COVID. It also helps provide you funds for if you had uninsured property that was damaged from the looting and vandalism in 2020. And it also helps out with certain supplier costs and expenses for operations. So these were added on this time around that were not included in the first round. So be aware of this for when you're going in for your forgiveness piece in the second time. Next slide. All right, so you may be thinking, how do I apply? There's a lot of different websites, a lot of different people, a lot of different emails that are going on out there. Applications started opening up and were being submitted into the SBA on January 13th. And the SBA has put a notice out there that they're going to accept applications until March 31st or until the funds run out. So what that means is they released the $200-something billion for the PPP loans that's offered out to the business communities. Once those funds dry up, it could dry up tomorrow, it could dry up a week from now, those funds are gone, they're exhausted. Good news is, as of 2 days ago, they've gone through $79 billion of it. So we still have a significant portion of funds available to the communities and the business owners. So that's positive news. And the next thing is, where can you actually apply for these things? You can apply for them at any depository institution, any bank out there, any federally insured credit union, any non-bank lender, farm credit system, any institution that's participating in the PPP loans. So I would I would advise everybody that is thinking about applying for a PPP loan to go out there, talk to their financial institution, their CPAs, their financial fiduciaries, and just ask them where they feel they should go to. Me being me, representing First Fed, you could always come to First Fed and we could help you out, no problem. But that's just something for everybody to know. You don't have to go to one specific place. Every organization is out there offering this to the communities. Next slide. So when you're applying, a main difference from this time from the first go around and the first round, the SBA is requiring that all institutions, whoever it may be, that's accepting applications, use an AIP integration software system that goes right into the SBA. So what that means is everything's all automated. You will go onto a link on a website or an email, and you will apply for that. You will apply for the PPP 2.0. You will upload all your documents, and that'll be automatically submitted to the SBA through their portal. One thing that we've been experiencing, a couple different items, this is very common, is when you upload and you're submitting in that new application for the PPP 2.0, a question comes up: did you receive your first round funding? And the answer, if you did receive it, is yes. And then a box will pop up and it will ask you, please provide your SBA loan number. This is very important, and this is the #1 thing that we see when people are applying for the PPP loan, is they put in their bank number. So they look at their promissory note and they see their bank number in there, so that's what they type in. When it gets shot over to the SBA, that's not being recognized as an SBA number, so it's kicking it back in error and it's declining the application. So then the bank has to reach back out to the customer, has to have them modify their application, and then they have to include their correct SBA loan number. So either A, the bank can provide that to them, or B, they could go into their loan documents and they could see the SBA loan number that's inside the promissory note that you signed off on for round 1. So if you have that available, I would suggest getting that, writing it down next to you before you go and start applying, because that is 100% necessary. If you didn't apply for a PPP first round, then that's null and void. You don't need that. The second thing is financial statements. When you're uploading your financial statements for your quarterly reporting, it's important to note, just sign and date them on every page. That is something that's being required, and it's by the SBA. They keep switching the guidance up, so it's just always safe just to do it. They have a target of 150,000 and above needs to have them signed, but we've been asking everybody if they can just assign them and date them, just so that there's no hiccups later on in the forgiveness piece of the PPP loan. So that's very important to note. And then the other one is verify that the original PPP loan was actually correct, and that all the tax ID numbers and social security numbers are correct when you're typing in a new PPP loan. What we found is a lot of people are typing fast and keystroking the wrong numbers in up by 1 digit, and it kicks it back, and it's a validation error again. And we have to go back in and we have to figure out what was wrong and incorrect, and it just kicks it back, and it's a back and forth approach between the customer and the bank and the SBA. So these are just some common things that are going on right now that we continually see. It's probably 1 out of 3 applications that come through. This is one of the top 3 issues. So just be sensitive to this when you're applying. Next slide. And so a lot of people have questions as to once I submit my application, when am I going to hear that I got approved? What's the turnaround time for that? And the answer is the SBA will take a day to 2 days to review everything, make sure you have everything there. Then they'll kick you back an SBA number, which means you're approved at that point in time. Then the bank will then send you out loan documents, you execute them, and then within 10 business days, they will fund your account. So that's the timing and the expectations that most banks have out there. It's actually set by the government, that the turnaround time that they have. So that's another common question that we receive after application from customers is, when will I get my funds and when will I get my approval? So just note that that's the process. So sit back and just wait for the SBA approval number, and you are 100% approved at that point in time. And then the most important thing is, you may have individual questions as it pertains to your business. I would highly suggest to go to the SBA.gov coronavirus website. they continue to update their FAQs, because as we go through this second round of funding, additional questions come up, and it's just not you, it's everybody has the same questions. So they continue to update these question and answers out there, and it's really one of the best websites to go to try to obtain the correct information. So I would highly suggest to reach out to that. Then also too, on the SBA website, they also have additional federal programs that you may have interest in that Will can maybe get into here a little bit later. So I believe that is it. Is there a next slide there? That is it. So after all the other conversations, I would welcome any questions that you guys may have. I know there's probably several of them, and I look forward to it. So thank you.
Great. Kurt, thank you very much. We appreciate that. And as a reminder, folks, if you do have questions, please type them in the thought bubble, and then we will get to them once the presentations conclude. We're going to move quickly now to Will Costello from Laskey. Costello. Will, your presentation is teed up, so go ahead and take it away.
Sure, yeah. Thanks, Ian, and thanks, Kurt. Nice job. Again, my name is Will Costello. I'm a CPA in Lakewood, and you can go to the next slide, Ian. I want to reiterate what Kurt just said, which is that website, the FAQs, is very good. So yeah, if you have the opportunity to go to that, there's a lot of information on there, and it a lot of times lays it out in a pretty simplistic way to answer some of the questions that are very common. So I totally agree with that, going to that website. I'm going to go over just some of the provisions that Kurt touched on a little bit earlier. If you remember with PPP1, it was very common to say, what are the expenses I can use? Payroll costs, utilities, rent were like the common things that came. But with this new provision in the Consolidated Appropriations Act that passed, there's some of these added eligible expenses that we'll briefly touch on. Payments to software, cloud computing, obviously a lot of people working from home now, they added that in there. Kurt touched on the property damage, covered supply costs. A lot of this has to do with possibly expenditures made where you might have like a PO with somebody or a contract in place, and then when the pandemic hit, you still were obligated to pay those dollars. The loan can cover some of those supplies as well. And then covered PPE and adaptive investments, obviously changes to your business that you may have implemented with plastic screens or barriers, getting your employees PPE, things like that, hand sanitizer, all that information, or all that supplies are covered as well. And again, it sticks with the 60% payroll, and then all these other costs can be part of the forgiveness as well. Ian, if you want to go on to the next slide. Some other provisions as well, the simplified application process for loans under 150. I'm sure Kurt can talk more about this in a Q&A, but the forgiveness process is geared to be simpler for people with loans lower than 150. If you remember, like maybe you saw some of the original applications for forgiveness that came out, and they were long and detailed, and you know, they've tried to simplify that to make it easier. The specific group insurance payments for payroll costs, they clarified a lot of these kind of ancillary costs that are related to payroll to be included. So group life insurance that's covered by an employer, disability, vision, dental insurance, those things, they are allowing those as part of payroll costs as well. And that was clarified in these provisions here. And then the eligibility was clarified more in this provision as well, as is a business or an organization that was not in operation on February 15th, 2020. One of the common questions that I get is PPP1 economic uncertainty was basically clear for everybody, because at that time this was new to everybody. You know, anybody that was in business, the economy was uncertain. You did not know what was going to happen. There were shutdowns. There was, you know, just a lot of uncertainty going on, mainly related to how the economy was going to respond to shutdowns. That question is still a main reason for why you need this loan. As Kurt touched on earlier, this money is there for people that need it. It is not sort of a free-for-all. And one of those questions that you need to ask yourself when applying for PPP2 is, are you still experiencing economic uncertainty? You know, we're farther along in the pandemic. I think there is some more kind of clarity of hopefully light at the end of the tunnel with the vaccines, and you can see how your business has responded in this period. So just ask yourself that question when you're applying for the loan for the second time. The money's there for people that need it. So if you have that uncertainty, you definitely want to apply, but keep in mind that that is a major requirement. Next slide, please, Ian. So the last part that I want to touch on for the Appropriations Act that was really clarified and is a huge relief to a lot of business clients, and a major question that I got, almost weekly or more frequently was, how is this loan going to be taxed? And initially, the loan was in essence going to be taxed. The IRS released a notice, 2020-32 was the notice name, and it was saying that you cannot deduct expenses that were paid for with loan proceeds. So that was in the original CARES Act, that it was not allowed, it was not going to be taxable income, but it was not going to be allowable expenses. So in essence, it would have raised your net income and raised your profit, which you would have paid tax on. This clarifies that the loan proceeds are not taxable income and they do not reduce expenditures, which is a huge relief for many of my clients. You still likely, again, people that were taking this loan had economic uncertainty in a down year, but still that would have been a huge hit to a lot of people to turn all that money that they received to keep their business going and then make them have a huge tax bill come April here. So that's a huge relief. Also, they added the fact that the EIDL loan, which you could get a $10,000 grant advance, was initially going to be not part of the forgiveness. So you'd be stuck with a $10,000 loan in essence. They changed that as well. So that is not taxable either, and it can be part of the forgiveness for the PPP. Next slide, Ian, please. A common question that I get is how to book the loan still. That comes up a lot. Many people, it increases your bank balance. What do I do with it? What's the other side of the entry? Some people were putting it to revenue, other income. The answer is it is a loan. It's a liability. So you want to put that as a liability in your books. PPP1, I've recommended to my clients, PPP1 sits as a liability until we get forgiveness and we know that you're going to have clearly all the dollars forgiven. Same thing with PPP2. If you go out and get second round funding, book it as a liability. And reiterate the same thing that I pointed out in the first time that I presented, which was documentation is important. Have all the backup, try to track every dollar that you can. People are a lot more familiar with this now. So if you did receive PPP1, I'm sure you're much more comfortable with how to track your expenditures, but continue to do that and document everything you can, because it'll make forgiveness even that much easier, especially if your loan is over 150K where you have to provide a lot more information. Next slide, please, Ian. So one of the things that I wanted to touch on in addition to PPP2 was the employee retention credit. So part of the new provisions allowed, initially the employee retention credit was not allowed if you receive PPP funds. And these new provisions change that. Now what that means is you can't take the credit with money that you used with PPP funds, but you are eligible to use both. So in 2020, the employee retention credit is available to businesses who had full or partial suspension. So a lot of times this is related a lot of times to the restaurant industry where you were suspended, you're not able to keep your business open. But then others eligible would be like with a significant decline in their gross receipts. So in any quarter versus the same quarter in 2019, if you had a 50% decline in gross receipts, you are potentially eligible for the employee retention credit. And what that is based on would be $10,000 wage paid to employees, and we'll get into that in the next slide. And there's also provisions that change for 2021. So next slide, Ian, sorry. So the credit is equal to 50% of qualified wages paid to employees up to $10,000. Now the 2020 credit is $10,000 per employee, and that is it. And it's 50% of those wages. And again, you can't double up. The claiming of the credit is done on your 941, so your employment tax forms. You want to work with your CPA or your payroll provider, discussing what you had with PPP along with your 941s and what you've submitted. It's possible, it's very possible that you've already submitted 941s for 2020. In fact, you should have by now. And you may need to go back and amend. And I would work with your payroll provider or your CPA again to have that discussion if you're eligible to get the employee retention credit. You're able to do both. So that's where we talk about here, that no doubling up. You can't use funds from the PPP to pay for employees and then use those same wages to get this credit. But if you had wages above and beyond what you had with PPP funds, you're able to take the credit. Next slide, Ian, please. 2021, the credit changes a little bit. The gross receipt reduction changes from 50 to 20%. So if you have gross receipts in Q1 that are down 20% versus Q1 2019. So this is the comparison is versus 2019 still. You can be eligible for the credit. It expands the limit on a per employee basis from 10K per year to 10K per quarter. And I think it's only available for the first 2 quarters of 21 as of right now. And then it also increases the credit rate from 50% of that 10K to 70% of that 10K. And again, this is where some planning comes in. If you're applying for PPP2, you sort of have an idea of what your payroll costs are going to be and what's going to be covered with your PPP funds, along with this other expenses that you may have. There is opportunity that if you plan this correctly, you can take advantage of both and be able to utilize both to their maximum capability. The retention credit is a reduction of expenses, so it's either going to reduce your employer taxes, or if you had a if you have a 941 for 2020 that you're going to amend, it's going to be a refundable credit that is actually taxable. But it's still something to analyze with your accountant or with your payroll provider. You definitely want to look at this credit along with the PPP2, or even if you're going for the first round of funding, and really plan ahead and make sure you can maximize both if there's that opportunity. And then next slide, Ian. That's it for me. Again, I too look forward to any questions at the end. I do encourage questions because that's where people are going to get the most information. I think there's a lot of high level information here, but there's opportunity for question, getting into detail with the questions. So thank you.
Great. Will, thank you. And thanks for talking about employee retention credit. I think it's really something that's important for businesses to consider and to be aware of. So thank you for that. We're going to go to Jessica Parkison from SALT. Folks, remember, please type in the thought bubble any questions you have, and we'll start asking them after Jessica's presentation. So Jessica, the floor is yours.
Hi, my name is Jessica Parkison. Like Ian said, I am the co-owner of SALT, not the kitchen side, but the front of the house side. We applied for our first round of PPP loans and received it back in April. So we were one of the very first businesses, I guess, to receive that. And for any of you that received that first round of PPP that early, you were scared to death to spend it incorrectly or have anything left over and really wanted that entire thing forgiven. For us, our payback for it would have been an extra $4,000 a month, to the point where Jill, my business partner, and I almost didn't sign off on that loan. Being a restaurant, you know, back then and even still today, we have no idea what's going to happen with us. So it was very fearful to have an extra $4,000 bill looming over us. That first PPP loan we received, we did not get the full amount that we were supposed to get. And we ended up having to bring our staff back, those that were willing to come back, because not all of them were, and pay them for a restaurant that was closed and only doing takeout. So that PPP money was gone within about 6.5 weeks. It is something that I have become very loud about, that PPP loans, at least the first round of it, did not work for the hospitality industry whatsoever. We recently, when the second round of PPP came out, we kept going, Jill and I again, kept going back and forth. Do we want to do it? Do we want to not do it? Do we want another loan looming over our heads? And then all of the guidelines started coming out with lengthy conversations with our CPA and our banker over at Huntington. We decided to go ahead and do it because we still to this day don't know what the future holds for restaurants. And when you watch the guidelines from Dr. Fauci and the government, it's looking like we are going to be the last ones to be able to open to full capacity. So that gets a little scary for us. For the second round of PPP, we looked into getting it, we received it, and then we were approved for it, and we received our money this past week, actually. And so now we are just going from there. You can go to the next slide. Where the restaurant industry is headed, I was just telling Ian this morning, we just found out that in the early hours of the morning that the Senate has actually approved the Restaurant CARES Act. So there will be $25 billion that'll be dispersed as a bailout for the hospitality industry. It went through its first round late last night, and then it needs to be done in its final round. With this bailout, it's going to be huge for the restaurant industry. We employ, I don't know if you people out there realize, but the hospitality employs more than the automobile and airline industry combined. And with 11.7 million employees around the country, there are over 500,000 independently owned restaurants around the country. And we are the top employers of people of color, females, immigrants, and single parents. We are also the top employee of those that are incarcerated and coming out to try and start their life over again. So for us, it's a huge deal that we need this funding and we need this help, whether it be through, the PPP money, or, like I said, a bailout is really what we need. I think that's it, Ian, or is there another slide?
Hey, Jessica, could you tell us
Yeah.
What are your hours of operation now?
So we are, right now, we're open. We just put out menu 22. We've been here for 5 years. We change our menu every 10 weeks. We are now open for probably until the middle of March. We're closed Tuesday, Wednesday, Thursday, open Friday, Saturday, Sunday, Monday. Takeout, curbside, and dine-in from 5 to 9 are our hours.
Great.
Sorry.
Perfect. Jessica, thank you. Thanks for sharing your story.
For sure.
Folks, please go ahead and type in any questions you have for Kurt, Will, or Jessica. So Allison, if you wouldn't mind, we I think have at least 1 or 2 questions. If you want to kick us off, please go right ahead.
Absolutely. So our first question is from Suzanne. And Suzanne has said that I have a new retail business. We opened in November 2019. I don't have a full quarter in 2019 to compare for purposes of the second draw criteria, 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Is there guidance for startups that don't have 2019 receipts?
There is verbiage on that. If you were in business by February 15th, 2020, I don't have that exact verbiage in front of me, but there is verbiage for a business that was a startup that was in business at that time to get the PPP. If you didn't get round 1, or if you did get round 1, either way, you can get round 1 and 2, I believe. So I don't have that exact verbiage in front of me, but I know that there is some that exists.
Okay, so Will, if I could, is it possible for you to send that verbiage to us and then we can send it over to Suzanne, or is it easy to find?
That's okay. Yeah, I mean, again, I just don't have it readily in front of me because there's a lot of information for stuff like this. But I can get you the verbiage of what the wording is on that and send it over. I don't know if Kurt, you have anything to add to that, but
Yeah, I would honestly go to the FAQ on the SBA site, and it's probably detailed out there. They have guidelines that specifically address those types of questions. But we could get some information and we could send it out later on.
yeah, Allison, I'll email you. I'll look for that answer and I'll email that to you.
Great. And then Suzanne, we'll send that back to you once we get it. We have your contact information. Great. So we have a second question here. It is, I have an issue. I expanded my business mid-March 2019. I wanted to start slow, so I didn't get overwhelmed. By the time my business started to click and do well, it was probably closer to the fourth quarter. This year, I really bumped the carryout, obviously, and fourth quarter was okay, although the whole situation, I stayed open to keep the staff. So he kept the whole staff and didn't want to lay anyone off. Payroll for the third quarter was over $100,000. On average per quarter, my drop was around 15%. Fourth quarter was a little over 25% down versus 2019. Although with sales tax, I do not meet the proper requirements. The other issue is that the first, second, and third quarters you can't compare because I did not properly begin a full payroll till August 2019. So looking for any help with this situation. So I know this is a complex question. I don't know if there's any general answer or if we can connect this person to someone on this panel.
Yeah, that's
Will,
a pretty
your thoughts?
Yeah, that's a pretty detailed question because I don't know what we're looking at. I mean, if you think about the eligibility to get PPP2, which is I'm assuming what that question is related to, not just you already got the first round of funding, you're looking at the second round of funding. The 25% decline in gross receipts is what qualifies you, and the gross receipts are based on how you report on your tax return. So whether it's accrual or cash basis, your tax return is sort of the kind of gold standard for what you use as gross receipts in terms of what you use to apply for the loan. Allison, I'm happy to connect with that person if they need to speak to me directly so I can ask a few additional questions to kind of get clarity on what exactly they're looking for. Or my other suggestion is if they do have an accountant or CPA, they should definitely be posing that question to them. They should be able to help them with that. But if not, you can reach out directly to me, and I will kind of walk you through it and get an answer for your question.
Okay, so George will reach out to you to see if you want to get connected to Will. You may already be connected, I'm not sure, but we'll make sure that you are connected if you want to ask further specifics on your question. Or you can send me another follow-up if you'd like. Cool, thanks, George. All right, so we have another question here from Chris. Can I use 100% of my loan for payroll?
Yes, you can. 60% is the requirement. That's the base requirement. But if you have payroll, enough payroll to cover for the loan, that's really what the loan is for. Those other ancillary expenses are there to help people get forgiveness for the loan, and if they had other costs because they had a potentially lower payroll dollar amount. But really, the loan is for payroll, and if you can cover the loan and get forgiveness with 100% paying out payroll, then you'll be fine.
Great. And Chris, if you have any follow-up, just let us know. So Ian, we are currently caught up with questions.
Great. Thank you, Allison. Thanks, everyone, for your questions. And to Will, thanks for offering to help out with some of those things, Kurt as well. We'll take a few more minutes. Please, if you have any other questions that percolate, please type them in. Also, feel free to reach out to us at LakewoodAlive if you have any questions about any business support, or if you want to be connected. We will send a follow-up email to folks who are part of this webinar. LakewoodAlive is also working with the city of Lakewood to help to disperse the federal government's CARES Act monies. And even though that was the CARES Act from back in the summer of 2020, businesses can receive up to $7,000 in rent and payroll reimbursement. There are certain qualifications that you have to go through, and you need to pay rent in a commercial enterprise. Unfortunately, it's not for any home-based businesses. And we've been helping folks. We've been able to get about $500,000 out the door. The city just added some more money that they had in reserves. So more money is available. If you have not yet gone through that program, please reach out to us and inquire. I just had a conversation with a brand new applicant who I hadn't worked with until this morning, probably about 20 minutes before this call. We're going to try to get him connected to rent and payroll reimbursement up to $7,000. So please reach out to us. You can reach out to me directly. You can see my email address there or at our phone number, 521-0655. Also, our friends at the Chamber of Commerce, Patty Ryan's information is on there as well. Patty's a great resource, and we work super closely together between the two of us in the city of Lakewood. We have a really great partnership. So, Patty, thank you again for your partnership on this webinar and everything that we do together. So, Allison, are there any other additional questions?
I do have another question. So we have a question that says, what type of financial documents does a small business need to provide to show a 25% loss? And what payroll documents should they provide?
I know for us, when we applied for the second round of PPP, we had to provide our 2019 payroll report, which we use a Paychecks company, and they keep everything for these PPP loans. And then I contacted our CPA, and she provided us with our P&Ls, profit and loss for the year.
Right. Yeah, it's a financial statement, P&L for the year, payroll reports, and you would want to use for round 2 of funding. You would want to try to use whatever year had a larger dollar amount in payroll, and you do have that option, whether it's 2019 or 2020. Whichever one's going to get you a larger dollar amount is what you obviously want to try to use for the second round of funding. So, and payroll providers typically are providing a payroll journal for the full year, as well as, most of them, including our firm, we do offer payroll services as kind of like an ancillary service to our current clientele. Our program prints out a report that is specifically for PPP loan applications. So most payroll providers, Paychex, ADP, those larger payroll providers where that's all they do, I'm very certain that they have the same report.
Yeah, Ian, too, you may want to send out the email to those that are attended on this. It's an email that walks through how to apply specifically from us, but it has a checklist attached onto it that anybody could go on there and pull it up, and they could see exactly what's needed for each individual's certain situation, whether you're a sole prop, an S corp, or an LLC. So, I mean, you could just pull that right up and it'll walk you step by step what you need.
Thanks, Kurt.
Great, thank you. So I have a comment. Someone mentioned that they are a very small business and they sent copies of their invoices and checks for the quarter to document their income. So, and it sounds like it was accepted along with their ledger. So I think it does sound like they can get somewhat creative in order to tell the story. And then Suzanne found what she was looking for. So she said, thank you. She found it. She's all set.
Great.
We are now
Great.
caught up with questions, Ian.
Okay, great. Thanks, Allison. Everyone, thank you very much for joining us today. Thanks to our co-host, the Chamber of Commerce, and thanks especially to our panelists, Kurt Kappa from First Federal Lakewood, Will Costello of Laskey Costello, and Jessica Parkison at SALT. Please get an order from SALT. Their food is fantastic, and we definitely want to support local as much as we possibly can. So you don't want to dine out, they've got a carry-out option, and they've got some of the best food in town, so please go check them out. Thanks also to my colleague, Allison Urbanik, our Housing Internal Operations Director. It's always good to be able to work on these with you. Thank you for asking the questions and keeping them flowing. Everyone, please reach out to us if you have any questions at all. We will send a follow-up email. And again, reach out to us if you are interested in learning more about the Small Business Job Retention Program, $7,000 from the City of Lakewood. Would love to be able to work with you to get those monies out. And with that, we will end the webinar. I hope everyone has a good weekend, and we look forward to talking with you soon. Thank you.
Hey, Ian, can I do one quick commercial before you end?
Yeah, go ahead.
Yeah, so if people want to join, we have a merchant call every 2 weeks where we're sharing great information and also having a nice round of camaraderie where we chat with one another about what's happening in the community. So if you're interested in joining our calls, give us a call at that number or email Ian and we can make sure we get you connected. It's a great way to know what's happening with our small business neighbors and friends.
Perfect. Thank you, Allison.
Thank you.
Okay, everyone. Look forward to speaking with you soon and have a nice weekend. Talk to you later.
Bye-bye.